Hello and welcome to the Katie Life podcast, your window to life in the UAE. My name is Anamika Chatterjee and I am the editor of Weekend magazine. Financial literacy is possibly the most important form of independence that women can hope to get. But sometimes, even those who move up the ladder and who are doing very well in their careers fail to save or invest wisely. Why is that so? Is it because we are always told that someone else is going to provide for us? Today, my guest is someone who actually is an advocate of financial literacy in the region. Please join me in welcoming Akshay Sardana.
This is the KT Live podcast by Khaleej Times.
Hi,
Akshay,
Anamika.
how are you doing?
Doing very well, thank you. How are you?
I'm doing very well. Now, financial literacy among women is a subject that is very close to my heart, and I'm very glad to have you around to just understand how are you going about raising awareness on the subject. So, to begin with, what drew you to this field?
Well, as our firm has been involved in wealth management for the last 28 years in the region, we've seen this play out from many different angles, and we've seen the gap in the market when it comes to financial literacy. Now, our role as financial advisors has always been to fill that gap. But especially with women, especially in this part of the world, we saw that the conversations just weren't happening. We saw that women typically, and this is a global stereotype, but typically here, were expecting their partners, their husbands, even their parents who were living with them to take care of that. They assumed that it would all be handled by them, and yes, they could then go on to be entrepreneurs, they could be homemakers, but at the end of the day, they just weren't having the conversations, and they thought someone else would do it for them. And over the years, we would try and address this situation. We would try and build that communication channel where it's important for you to be in charge of your finances, or at least understand the holistic picture of what your family's wealth position is and how do you breach those conversations. And over time, we're in a place right now where, 50% of our clients are women, 50% of our workforce are women, and it's just been something that's been very close to our heart. And as you have those conversations internally, as we're having those conversations with our client, we're seeing it have more of a positive effect. We're seeing women being empowered and controlling the narrative and taking charge of their finances, and we're seeing the success stories play out. This is amongst our clients. So we thought, this is, as a public service, the more we can get this message out there, the more we can educate just the market as a whole. And this is not solely a women's issue. This is an issue that we all have to address. The banks, the wealth IFAs, the wealth management profession has to bring this conversation to the forefront, because at the end of the day, we're trying to bring everybody up, and we're trying to get everybody's knowledge base higher so that they can then make better and more confident decisions about their future.
Now, typically, it is believed that because women are always told that someone is going to provide for you, your husband is going to provide for you. If you're living with your father, he's going to provide for you. So, is that one of the major reasons why financial literacy is sorely lacking among many women, if not all?
Regionally and in the Asian community, yes, that's more predominant of a reason.
What are the other reasons apart from this?
The expectation is there, but this starts at the root. We are not being taught any sort of financial literacy. Well, this is changing now, but in schools. So from a young age, we're not able to have the vocabulary to discuss. We're then going on to maybe acquire some debt, maybe build or strengthen stereotypes that, okay, I'm now married and my husband is having all those, is taking care of all my banking accounts and all my finances. I now have 2 children. I'm not able to discuss what my plans or goals are for them. So it's a communication issue. And then when you look at the nuance for women who are entrepreneurial and who are successful. There are pay gaps. There are the desire for flexible work or working from home. Their investment mentality is a little bit more conservative. And these are statistics that we see from UBS reports, from Fidelity. So there are all these nuances specific to women. One is the stereotype of, okay, my expectation is someone else is going to do it. Second is, now that I can or am able to do it, is the infrastructure there? Are people able to guide me and advise me? Does the banking system allow me as a woman to make these decisions with confidence? And that's also lacking. So it's the entire conversation around it. And I think the main reason is, these differences with the way women want to build their careers. And the expectations of the family dynamic. But it starts with communication and education.
Now, building on the career, we see that sometimes even the most successful women who have climbed the corporate ladder are also woefully unaware of how to manage their personal finances. And it's a contradiction. So why is that so?
That's absolutely correct. We see that all the time. We see entrepreneurs be very successful in their business. And I guess we see this in our day-to-day lives. We get so busy with what's going on in that moment that we don't prioritize our financial planning. We don't prioritize our long-term family wealth. And I think it starts with communication. Are we carving out time once a month, once a quarter with our partners, with our family, to have the discussion about money? And a lot of people don't do that. They just think, oh, no, okay, either my partner's going to do it or it'll happen later on. Let me focus on my social agenda. Let me focus on my business. And then I want to focus on my finances. Oh, but the kids have an activity. I got to do that first. They're a priority. So how do we prioritize financial planning? I think it starts with communication and actually understanding what your long-term goals are and what your values are and putting that in line with how you implement a financial plan, a financial strategy. So once you realize that this is important for my children, it's important for my family to leave a legacy, you can start making these decisions. And as I said before, with a lot more confidence, and it starts to become a priority because you've gone through that goal-setting exercise. We see it quite often. You're planning for your business, you're setting all the goals, you're meeting your KPIs, but have you done the same thing for your family and what that means for their long-term well-being? And that's where we try to plant the seeds. And to everybody listening, I would say it's important, just start with having a conversation and put it in the diary where you can have that conversation consistently. And maybe you don't implement the plan. Maybe you're still too busy growing your business, but at least you can have some accountability with your partner, with your family members, and bring them all in. People say don't bring your children into these conversations. I think, why not? Up to you how involved you want them, but everyone should be, it shouldn't be taboo, or it shouldn't be something that we don't talk about or afraid to talk about. And it starts with goal setting. What is important to me and why? Not even me, what is important to us and why? Do my values and long-term goals align with my partners? If we can start having that conversation, then, as I said, the financial planning becomes a very important tool to help meet those objectives and goals. And then everyone can do that with a lot more excitement. And it does become a priority because it does help you in your business. It does help you with the freedom to pursue your goals and to leave that legacy and to start your charity and do interesting things with your children. So if you put it on the back burner, we kind of go through life and sometimes this gets left behind. And it's not that we don't have the right intent. Everybody does want to do this. And we see that time and time again, but they just don't execute it so well. And that's why I would say our role is to act as a guide and help you in that. But I would start by saying no one's not doing it because they don't want to do it. They're doing it because they just maybe haven't thought about why it's important to them and haven't carved out the time.
Now, us is a very important part of that answer because, sometimes women, even if they are in marriages, they want to have separate financial planning for themselves.
Absolutely.
You know,
That's how you build good habits.
Yeah, but traditionally, especially Indian women, are told that, you need to plan together. You need to, if you're buying a house, just think as one. But right now, that narrative is changing because women want to be independent to the point of, having their own finances. Where is that conversation headed?
It's moving in the right direction. The fact that women want that is a good thing. We know it's a good thing. We've seen scenarios play out where, I've not been involved in the financial planning, and then if something happened to my partner, I have no idea what to do, and then you're dealing with legal probate and lawyers and governments depending on where you are, and you don't have the time to grieve and allow your family to continue to live a life of dignity. So we've seen the negative side of this scenario, and what I just described is the ultimate worst scenario. But the fact that women want that independence is really encouraging. As you said, Indian women society is still, there's an expectation that they, okay, we do it together if we're buying the house. And UBS did a study, I think in 2021, where it's quite clear 50% of women globally aren't involved in the financial planning. And then the 50% who are, 20% say that it is the husband that is doing the heavy lifting. I'm involved in the conversation, but I'm not actually doing anything. I don't have my own bank account. I don't have my own savings plan. I'm not, the children's education fund is handled by him and not by me. It's not going from my wealth. And I think that, especially in this part of the world, the independence is even more important. And then if you look at the global narrative of losing a partner, women living longer, all these things make it even more important that you understand how to take control of your finances. If you unfortunately were to lose your partner, you don't want to be in a position later in life where now I have to learn how to manage my wealth from scratch. So if you can build a scenario where you have the possibility to have your own investments, to have your own bank account, even if it's small, even if maybe you are a housewife and you're not earning, but at least you're building the right habits to be prepared for any unforeseen circumstances in the future. And unfortunately, that's the world we live in. We live in a world of risk, and we don't know what's going to happen. And, it's great that we're seeing that, yes, I want my independence now. Why they want the independence is culturally and across the world, it's for different reasons, but yes, I support it. We support it. And I think now the narrative is you should have your separate bank account. You should be funding.
No joint accounts?
No joint accounts. We at Continental, we think just because in this part of the world it's important, but everywhere else, even if you're not earning, have your own account, save a little bit, build a habit of saving, understand, if you're investing in something, understand how would you react if market conditions change. Understanding your behavior is really important. I could say if I've never invested before and now given the situation I have to take care of my own family or whatever the circumstances, I am now in charge, I could say, yep, I'm willing to take all the risk in the world. My kids need to go to university and I realize that markets are a little bit volatile and I get spooked and take all my money out. Now my children don't have access to those funds for their university. And, I'm not fear-mongering here, but we see these scenarios play out where, and this is not necessarily women, where one partner in the relationship hasn't been involved, loses the other partner or circumstances changes, and they just don't know how to continue. And they have to make decisions in a very different way, based on fear, based on the timing of it, which might not be the right timing. I have to sell everything. I have to sell the house. I don't know if my husband or I have taken the right provisions to allow my kids to continue to go to school. Do I have to relocate back home? We see these negative scenarios play out if that conversation, that transparency, that proper financial planning hasn't taken place. Now, I went on a massive tangent here, but to your question, the fact that women are exploring this independence, demanding this independence is a very good thing. And the infrastructure around, as a wealth management firm, we are addressing this. We are speaking to women in a different way. We are telling them that it's important, joint insurance policies exist. have your own, have separate. If one of you miss the payment, it affects both of, if for whatever reason the credit cards change or you're traveling and the secretary doesn't make the payment in time, both policies are affected.
Right.
And what tends to happen is, one person takes the lead. So I'm not inculcating those good behaviors. When it comes to wealth and money management and finances, it's important to start early. It's important to not sit on the sidelines and really understand. You could be like, everything's automated. I want my husband to do it. I'm fully involved in the picture. We have our biannual meeting. It's great. I understand. I know what the passwords are. I know the policies we have. I know the investments we are. Our family risk is understood, but I don't want to participate at all. That's also absolutely fine. So I want my independence to do my things, but I'm fully involved in the planning stage. I'm fully aware of our current net worth, our wealth structure, how it's structured and what the risks are. That's the most important part. And I think when it comes to financial literacy and what we're trying to do in this market, it's not buy a solution or, you should definitely have your own bank account. I think that's a very good thing, but it's just, are you involved in the conversation? Do you know what the questions are to ask? Do you know what your risk profile is? Has anyone ever sat with you? What are your goals, values, and what's important to you? That's the starting point. Once you have that, these conversations then flow in a very different way, and it becomes very easy to have it with your partners, with your friends, with your colleagues at work, which is just not happening is at the level it should be, especially in this part of the world. We are underbanked here, underserved, or overbanked but underserved. People know what they should do, but they aren't doing it.
So what about homemakers? In this part of the world, we see that men take up jobs and move here, and women, and who they are married to, they have to leave everything behind and move here sometimes without jobs, and they find themselves being homemakers. Mm-hmm. So what can homemakers do to empower themselves financially?
Again, it's if that's the choice of the woman, absolutely fine. And we do see that is very common out here. The husbands come on nice packages. The women are raising the kids. There's a lot they can do. One is be involved in the conversation. If your husband is meeting a financial planner or meeting a banker, be part of those conversations. Join him for the meetings. If you're not earning as part of the family, you can still be making the decisions on the finances based on what you believe is right for your family and for your long-term wellness. So I would say being involved in the conversation is really important, and setting up your own plans, whether it's investing small, and if your husband is supporting that, I think that's really important. We encourage people to do that. We had a client the other day who came and said, I don't make any money. It's like, well, is it important for you to be investing? She's like, absolutely. My kids are asking me questions. They're talking to me about investment plans and mutual funds and crypto. I want to participate. So I was like, well, why don't you just talk to your husband, and something from your annual savings goes towards your account where you can then make these decisions on your own. And she's like, I've never even asked. So it's just being able to have those conversations. And then the idea is those investment decisions that you make independently then empower you to make other decisions. Wow, I'm investing this money, I'm enjoying it, or I'm happy that it's earning something based on decisions I've made. Let me go start a business. Let me go use that extra interest that I've made to go fund a business that I'm passionate about. So, and we see this with our clients all the time. So it's, as I said earlier, not sitting on the sidelines, finding a way to participate. You are a homemaker, but you can still be involved in the decision making. You can still be involved in the goal setting, and you can still, if you are inclined, find a way to set up smaller structures. Or, you know what, for the kids' education savings, I want to handle all that. I want to be involved in decision making. I want to be involved in the funding of those solutions, and I want to be involved in the ongoing management. And it starts with, as I said, having the conversation.
Yeah, as somebody who's covered gender in my formative years in journalism, I can say that, men in such cases, the men who go out and work, they claim ownership of the money also because they feel that they're working for
I'm
it.
doing it well, yeah.
And the work that women do at home, it's considered unpaid labor.
That's
You
an
know.
unhealthy dynamic, and
Yeah.
I think that narrative is changing globally. I know it's more prevalent in this part of the world. In India, we see that is the way it is in a lot of cases. But unless you're talking about it or able to talk about it with a support system, with your larger family, with advisors, then you can't kind of make headway. But it's also arming women with the knowledge that this is what's happening in the rest of the world. This is why we need to be having these conversations. So, in case your husband or partner isn't there to make a living, let's say he falls sick, you have to be a primary caregiver for him.
Absolutely.
You need to know what the situation is. And if you have something on the side that you've been doing, that acts as a stopgap, it acts as some sort of support.
And knowledge is empowerment
Absolutely.
to begin with. You have constantly referenced this part of the world. So, where does financial literacy among women stand in the UAE and GCC at large?
We're seeing a lot of interest. We're seeing a lot of other institutes like us. We're seeing a lot of the big players, banks and insurance companies and fund houses, all addressing this from different angles. But what's great for us is that when we do fill a room, men, women, and bring up this subject, everyone is engaged. Everyone wants to hear. Everyone realizes that there are gaps, and we're able to have the conversation in a very constructive way. And then 1 hour long sessions that we have go into 3 hour sessions, and they're asking very specific questions. Okay, I know we should be investing. I know we should be having these conversations, but what can I do today? What are the actions that I can take now? I've had the once a month meeting with my husband. What can I do? And there's lots of tools out there, and those tools are the same for men and women, but there's lots of things that you can do to start. Be it self-directed, be it working through an advisor, being it partnering with a bank. There's lots of options out there, and it's really exciting that, yes, this part of the world, the conversation is happening in a very big way. And given where we are, given the cultural nuance, it's exciting to see that people are still open to talk about it and open to engage in conversation. Confidence is building in a big way, which is great.
So, a recent article in Financial Times said that financial education for women is becoming an important part of fintech. Is that true for this part of the world?
Yeah, I think everything fintech, edtech, insurtech, it is. We live in a country that's really supporting these new initiatives, and we are seeing that in some respect. I don't know. I think now with this whole advent of AI, if this is just a specific concern for women, but technology as an enabler, how can we get information out to communities that need it, be it women, be it children in schools? I see it as a very exciting space, and it is, as I said, the government here is really supporting all these sorts of initiatives and keeping such an open mind that we're seeing a lot of people come in and experiment and have successes and pivot if it's not working. I think the education system here is also quite open, but yeah, it's something that's new to us, but we are definitely seeing women, children have access to a greater wealth of knowledge at a younger age. And to me, that's exciting. As if we can empower people with financial literacy younger, catch them sooner, it's good.
A recent study suggested that women are more conservative with investments. Why is that so?
I think women tend to invest in things that are valuable and important to them. When they, at least from our experience, when they look at investments or the idea of investing, it's for the security of their family. It's not necessarily with the mindset of, I'm going to make a quick buck or asset accumulation. It's, I want security. This is why I'm doing it. So from that perspective, that's why I would say they are a little bit more conservative, but that's a really good thing. And actually understanding that and being able to have that conversation allows us to advise them on what that investment strategy would be accordingly. And do you need to take a little bit more risk if your goals are X or Y? then we can have that conversation with them. But I think, yes, from what we've seen, it's I'm conservative because this is for my family, not because I need to make lots and lots of money. So starting with that point is, and I think studies have shown that across the world.
And how lucrative is investing in gold? For
Oh, I don't think I could be seen to be giving investment advice, especially on a podcast like this. But look, I won't say try and time the market, try and pick a strategy that's important, whether it's a commodity like gold or cash or crypto.
Yeah.
Or my point is, participate. Don't sit on the sidelines. Diversify. Be involved. Invest in gold if that's something that makes sense to you and fits into your overall strategy. But how important is it, or is it the right thing? That depends on who you are, where you are on your financial journey, and what your risk tolerance is as well.
essentially start small, but start.
Exactly.
Okay.
Even if it's saving, we joke with save the 20 dirhams instead of a coffee, put it in a savings account. It's not about that money that you put aside is going to make you rich. It's about the discipline of putting money aside on a regular basis. Being able to think about, I'm not going to put it on the coffee, I'm going to put it in an account that's going to generate. Because that then starts to grow, and that 20 dirhams starts to grow into a few thousand. Once you have a few thousand, the power of compounding, a beautiful concept. It gives you such confidence to start saving more. And then once you've got this foundation of good discipline and seeing your wealth grow, then you can make bigger decisions, more impactful decisions on your family. So this is what I'm saying to the point earlier about being a homemaker. Don't not participate. It gives you a lot more confidence in decisions you make that affect your family directly.
And when should financial education for women, at what age should it start?
I don't think that's agnostic to women, or I don't think that's specific. Sorry, to women alone. We work with some really incredible firms here who are speaking to children about financial literacy, and their sweet spot is 12 and above. But they run programs very successfully. We've done this for our clients and their children from 8 to 10. So 8 years old, they are able to have they're able to have the conversation where I have children. I have a 7-year-old, and we have a very he's a boy, he's not a girl, so that's why I'm saying it's not specific, but we have a savings jar, we have a spending jar, and we have a sharing jar. And they get very excited to earn pocket money and help out with chores and put it in the, you have to put it in the sharing jar first. You have to put it in the save jar next. Then you have to put it in the spend. And, I'm seeing their level of excitement at 7. I mean, my 5-year-old gets excited. He finds dirham coins on the beach and he gets really excited by this. So the younger you start building these sort of habits and the conversation around money and not shying away from it, I think we'll reap really good behaviors in the future. And the sooner we can bring it into a school system with a formal curriculum, which is what some, I don't know if I can use names of other partners or anything like that, but what some people in this region are doing very successfully, and other places in the world, which is not, they're not trying to sell a product. It's not, an app or a credit card, which there's nothing wrong with too. Those are tools that can help. But this is just, have you thought about what it means? Do you know what savings is? Do you know what debt is? Do you know what investments are? What the stock market is? Kids are engaged. They want to know. They're smarter than we give them credit for. So yeah, just the younger the better. 10, 11 is a great place to start. We see massive engagement.
Now, this is the age of gig economy. Has that altered our attitude towards money?
Yeah.
How?
Well, the security is not there. Not only am I guaranteed a specific income on a monthly basis, the protection that comes with working a full-time job at a major corporate, the medical insurance, critical illness, life insurance, the pension or end of service benefit doesn't exist. So your financial planning has to, or looks very different, and the questions you need to ask and the prep you need to do is very, very different. So again, it's starting small, making sure you understand what are the protections I would get working full time, what is the freedom I get from working freelance or part of this gig economy, and how can I fill those gaps of some of those solutions if I lose the ability to earn an income, which is our most valuable asset. There's no company to step in and protect me. So have I taken the right provisions and made the right sort of infrastructure in place to help my family to continue to live a life of their standard of living, or live a life of dignity if I'm not able to work.
Now, the attitude towards money is also varies from generation to generation, you know.
Yes, it
There's a
does.
generation that had to pay monthly installments of loans.
Mhm.
Then you have the next generation that is born into relative security, and the next one which is born into absolute privilege. So obviously the attitude towards money is very, very different.
Yeah.
What are you observing with the Gen Z?
Well, we're going through the biggest generational wealth transfer in the history of humanity. So, what Gen Z is inheriting and what that means for the next generation is at the forefront of the wealth management profession right now. But what's interesting from our perspective, and we talk to all clients from the entire spectrum of wealth. Um, they're coming to the table and they're excited to participate. Tech first, like to be communicated in a little bit of a different way, very quickly, digitally. The touch points are quite far more frequent, but they're ready to have the conversation about what they want to do with their money. And the biggest trend, I think this is a global trend, but we're seeing it too. I want my money to go into something that's going to have a positive impact on humanity, which is a really encouraging thing. Even, as you said, to inherit a lot of money, the whole trust fund mentality, it's there, but they still are looking to make a positive impact with what they've either inherited, what's been left for them, what they've earned themselves. The conversations are all very positive. People do want to make a positive change, sustainable investment, ESG investments, just impact investing, not investing in companies that don't align with my beliefs and values is what's really, that's all they want to talk about with us. They still don't get it when we say that, yes, potentially that might mean a different risk reward conversation. Like, no, it doesn't matter. Forget about our goals as long as we're doing things and putting our funds and money where it's making a positive impact. So that's the general trend with Gen Z. And it's exciting because that those conversations excite me. It seems like it's all moving in the right direction. And I think now you look at these young entrepreneurs, that is where the funds are going.
Very well said, Akshay. So, last question. Do you think the workplaces here are evolving enough to address the issue of pay gaps when it comes to gender?
It's a great question. I think the key word you used is enough. They are evolving. They are evolving in the right direction. Uh, Employers are having a very open dialogue with their employees. We're seeing decisions being made by small companies, SMEs, and large companies in the right direction of equal pay. If you look at our firm alone, we've got over 50% of our leadership team who are women, and obviously it's something we've had to address internally, where there's this dialogue on the pay gap, and we've really proud to say that we don't have one. So if we're having that conversation and we're seeing results from these sort of conversations, I think it's moving in the right direction. A lot of the women entrepreneurs who I know are, again, proud to say that they are paying at a level that's equivalent to what a man would earn in that respective field. So it's definitely happening. Enough. I don't know the answer to that, but we are seeing employers and employees have the dialogue and being guided in the right way. I think the government is supporting that in a big way. The companies that are here are open and transparent, so it's all moving in the direction. Could we do more? Absolutely. Should we be doing more? Absolutely. But this is why we have these conversations. Just
So important to have these.
yeah. And if you feel like there is a gap, speak to your employer. I know that's a scary proposition if you don't know. I know there's still companies that exist where it's not transparent. I've been an advocate for this the longest time. Yes, there is a nuance of what someone else's position is, how much they earn, but ask the question. If you don't ask the question, then you won't know. And if you don't speak to your employer openly and show your worth and really say, look, this is my value, and say that with confidence, then I don't think change will come unless you kind of have that conversation.
True, very well said. Thank you for joining us, Akshay.
Thank you so much. I really appreciate the time, and I hope I was able to bring some value.
The world is full of possibilities, and the key to unlocking that world is financial freedom. The awareness to know what you can do with money and how you can multiply your wealth. To all the listeners tuning in, please share your thoughts on the social media pages of Khaleej Times. Till next week, this is Anamika Chatterjee signing off.